Assalamualaikum warahmatullahi and selamat sejahtera. Okay, I'm going to continue my discussion on MFRS 137 with the contingent asset. Okay, what is the meaning of contingent asset? Okay, contingent asset can be defined as a possible asset, okay, that arises from past events and whose existence will be confirmed only by the occurrence or non-occurrence of one or more uncertain future events not wholly within the control of the entity. Okay, so here, the definition of contingent asset refers to possible assets that arises from past events. Okay, possible asset here means there is a possibility that the company would receive an income from the outside party. For example, a company took a legal action against its customer for a breach of contract. The possibility that the company will receive a compensation from the customer depends on whether the company wins or loses in the case. If the company wins, the company might receive a compensation from the customer. If the company loses, the company might not receive the compensation. Okay, this one is about the recognition of contingent assets. Okay, contingent assets can be classified into three. Okay, the first one is virtually certain, the second one probable, and the third one is possible and remote contingent assets. Okay, if the contingent asset is virtually certain, it should not be recognized. It should be recognized as an asset in the SOPI and as an income in the SOPOL. Okay, so what is the meaning of virtually certain? Okay, virtually certain means it is very highly probable that the company will receive income from the outside party, or it is almost certain that the company would receive income from the outside party. Okay, so if the contingent asset is virtually certain, it should be recognized as an asset and income. Alright. If the contingent asset is probable, probable here means there is more than 50% chance that the company would receive an income from the outside party. So if the contingent asset is probable, it should not be recognized as an asset, but a disclosure is required in the notes to the financial statements. Okay, and the third one, if the contingent asset is possible, possible here means there is less than 50% chance that the company would receive an income from the outside party. And remote. Remote means unlikely to receive. An income from the outside party. If the contingent asset is possible and remote, it should not be recognized and disclosed in the financial statements. Let's have a look at the example of questions on MFRS 137. This example is taken from past sem question of January 2018. Let's read the question together. The company Synergy Resources Berhad is finalizing its financial statement for the year ended 31st December 2017. The following events occurred in the company. So for the first situation, the company sued its main supplier for 1.5 million damages for unreliable supply of materials which has halted its production. As at the year end, a judgment was given in favor of Synergy Resources Berhad. The company's lawyers were of the opinion that it was highly probable that the company would receive compensation. This compensation is actually more related to contingent asset. Why? Because there is a probability that the company would receive compensation. Okay, there is a probability that the company would receive a compensation from the supplier. Okay, usually this question requires student to explain the accounting treatment as well as to prepare the journal entries. Okay, first, okay, how do we explain the accounting treatment for this situation? Okay, so we can write the accounting treatment as follows. Okay, so the above situation meets the definition of a contingent assets because it is probable that the company will receive the compensation and the hearing is outside its control. Okay, the contingent asset should be disclosed in the notes to the financial statements. Okay, so here, okay, for the accounting treatment, the contingent asset is not recognized, okay, as an asset as well as an income in the SOPOL, but it has to be disclosed in the notes to the financial statement. Okay, why the contingent asset cannot be recognized? Okay, because it is stated here that it was highly probable that the company would receive compensation. Okay, since it is highly probable, okay, the company would receive the compensation. Okay, the contingent asset should not be recognized. Okay, so in order to recognize a contingent asset, okay, as an asset as well as an income, okay, the contingent asset must be very highly probable. Okay, or it must be virtually certain that the company would receive compensation. Okay, so highly probable is not enough in order to recognize uh, the contingent asset in the financial statements. Okay, all right. So for the journal entries, okay, we don't need to prepare any journal entries, okay, for the above situation, since the contingent asset, okay, is not recognized, okay, as an asset as well as an income in the financial statements. All right. Okay, let's go to the second situation. Okay, the company has caused severe pollution when the manufacturing plant accidentally released toxic waste into the local river nearby. There was a legal requirement by the Ministry of Natural Resources and Environment to protect the environment. But until the end of the year, there was no legal action brought against the company. It was estimated that the total cost to rectify the environmental damages was Rm 1.8 million. Okay, so the question requires student to explain the accounting treatment as well as to prepare the journal entries if any. Okay, so this situation is more related to a liability. Okay, why? Because there is a probability that the company will have to pay for the damages or pay for the compensation. Okay, but for the accounting treatment, we have to explain whether the liability can be recognized as a provision or not in the financial statements. In order to recognize a provision in the financial statements, we need to ask ourselves three questions. Three questions. First question is there a present obligation as a result of past event? Okay, so from this situation, yes, there is a present obligation, which is legal obligation, since it is required, since there is a legal requirement by the ministry to protect the environment. So there is a present obligation here that is legal obligation as a result of past event. Okay, the second situation, is the outflow of resources probable or not? Okay, so from the situation, the outflow of resources during the current year is not probable, because it is stated here that until the end of the year, there was no legal action brought against the company. So the outflow of resources during the during the current financial year is not probable. Okay, since there was no legal action has been taken against the company, okay, until the end of the year. Okay, so the second condition is not met. Okay, the third question that we need to ask is, can the amount of obligation be estimated reliably or not? Yes, we can estimate the amount of obligation reliably. That is RM.8 million. Okay, so for this situation, okay, the second condition is not met. Therefore, okay, we should not recognize this situation as a provision, okay, in the financial statements, but it has to be disclosed as a contingent liability in the notes to the financial statements. Okay, for the accounting treatment, okay, we can write as follows. Okay, there is a present obligation, that is legal obligation, okay, as a result from past event. Even though a reliable estimate can be made, okay, even though the third condition, okay, has been met, okay, it is not probable that there will be an outflow of resources during the current financial year, since no legal action has been charged against the company. Okay, thus the company should not recognize a provision but to disclose it as a contingent liability in the notes to the financial statements. Okay, for the journal entries, okay, we do not need to prepare any journal entries, okay, for the situation, since okay, the liability here, okay, cannot be recognized as a provision in the financial statement, so no journal entries required for this situation. Okay, let's have a look at the third situation. Okay, during the year 2017, one of the Synergy Resources Berhad's employees was injured while working. The employee took legal action and sought damages of RM700,000. Okay, so Synergy Resources Berhad has taken legal advice, and it was probable that the company would be held liable. Okay, the amount payable was estimated to be RM500,000. Okay, so what would be the accounting treatment for this situation? Okay, so this situation is more related to a liability, okay, because there is a possibility, there is a likelihood that the company would have to pay a compensation to its employee. Okay, so in order to explain the accounting treatment, we have to ask again the three questions. Okay, first, is there a present obligation as a result of past event? Yes, okay, there is a present obligation that is legal obligation, okay, as a result of past event. Why it is a legal obligation? Because okay, there was a legal action, okay, taken against the company. Okay, when there is a legal action taken against the company, then there is a legal obligation there. Okay, and then the second question is the outflow of resources probable or not? Okay, so from this situation, okay, we can see that okay, the outflow of resources is probable, okay, because it is stated here. Okay, the SRB, okay, has taken a legal advice and it was probable that the company would be held liable, okay, for this situation. Alright, so in order to determine whether there is okay, a probable outflow of resources or not, usually a company will seek a legal advice, okay, a legal advice or seek an advice from a lawyer, okay, to determine whether whether it is probable or not the company will be held liable, okay, for the lawsuit. Okay, so based on the advice of the lawyer, okay, the company can actually determine, okay, whether the outflow of resources is probable or not. Okay, so For the third question, okay, can the amount of obligation be estimated reliably? Okay, yes, the amount of obligation can be estimated reliably. That is RM 500,000. So, for the accounting treatment, okay, we can explain as follows. Okay, there is a present obligation, that is legal obligation, as a result from past event. Okay, it is probable that there will be outflow of resources and the amount payable is reliably estimated. Okay, thus the company should recognize a provision for damages of RM 500,000 in the financial statements. Okay, so this is how we explain the accounting treatment. Okay, alright, and then do we need to prepare the journal entries for the above situation? Yes, okay, we need to prepare the journal entries because the liability, okay, can be recognized as a provision in the financial statements. Okay, so we have to debit SOPOL, okay, compensation for damages, okay, RM 500,000. Okay, this is because the liability, the liability is recognized as an expense in the SOPOL and also as an liability, as a liability in the SOPI. So we have to credit provision for damages RM 500,000. Okay, so provision for damages here refers to the liability, okay, that is recognized in the SOPI. All right. Okay. Next, okay, this is the extracts of SOPOL and SOPI. Okay, so in the SOPOL for the year ended 31st December 2017, we have to disclose, okay, the compensation for damages, okay, under other operating expenses. Okay, so the amount is RM 500,000. So this one is an expense. Okay. So we have to disclose it in the SOPOL. Alright. And then in the SOPI, okay, as at 31st December 2017, okay, the provision for damages, okay, will be disclosed under non-current liabilities, okay, amounted to RM 500,000. Okay. So for the provision for damages, okay, we can we may also include it under current liabilities. Okay, it depends on the situation. Okay, if the situation states that the company has to pay for the obligation within 1 year period, then it has to be disclosed under current liabilities. Okay, but for this situation, we put it under non-current liabilities. Okay, so this is how you disclose, okay, the information on the expenses, okay, on the expense and also liability in the financial statements. All right. Okay, that's all for now. Thank you very much, okay, for your attention. Assalamualaikum warahmatullahi wabarakatuh.